It's time now for our conversation on risk and reward, tackling the debt crisis in Africa. As you know, Africa has potential to be a huge driver of the global economy in the decades ahead, but is consistently hampered by high levels of debt to GDP, especially following the pandemic. To highlight the challenges and the opportunities, please join me in welcoming Taimoor Labib, founding partner, head of MENA and chairman of Africa at Affirma Capital. Hanan, Bakr, Sakr, CEO and founder, ARD Sustainability Consultancy. Dr. Rawaa, Harati, founder, Kinz Consultancy. And Vikrant, Bhansali, CEO, Middle East United Bank of Africa. Welcome. Thank you so much for being with us today to discuss this very important issue. And as we know, African countries will pay out $163 billion in debt servicing this year alone. That's up sharply from just $61 billion in 2010. Vikrant, help us make sense of Africa's debt crisis. What exactly is the debt crisis?
Right. Thanks for the question. I think it's a great honor and a privilege to be here with this esteemed panel discussing the debt crisis. Let me paint a picture for you. So we've had an explosion in debt in Africa. Currently stands at about $1.15 trillion. So it's kind of tripled. If you take a time slice from 2010 to now, the debt has tripled. Like you said, the debt servicing has gone up 2.5 times to about $163 billion. And the debt to GDP ratio has doubled. So there's been an explosion in the debt. Now, if you think about it, when the debt servicing has gone up so much, it is creating all kinds of problems when the refinancing comes. So in 2010, the reason we took that slice is that 2010 is when there was cheap money available. A lot of African economies were growing and they loaded up on debt. And now that the debt is coming to maturity, it's creating restructuring issues, right? And at the same time, the profile of the creditors has also changed. So we initially started in Africa with largely multilateral debt, the IMF, the Africa Development Bank, etc. And now, increasingly, we are getting debt from bilateral sources, from commercial sources, from capital markets. That's expensive and volatile, right? So all of that is creating a new paradigm where we have to figure out a protocol for the debt refinancing. We have to make sure that the end use of debt is correct and is for social development. Think about it this way. During the COVID period, African governments, about half of them, 25 of them, spent more money on debt servicing than they did on healthcare. Now that's a problem, right? So every time we talk about debt and its repayability, we have to also keep in mind the impact it has on society, on developmental issues, and we have to keep in mind that every dollar that is spent on restructuring is a dollar that's taken away from social development.
And evidently, it is having a huge impact. And Dr. Rawaa, I would also like you to help set the stage for us on the structural factors that have really shaped Africa's debt landscape, the misconception around it, and how the pandemic has added to these challenges, in your opinion.
Sure, thank you, Ramya, and thanks for having me. Well, I think it's important to acknowledge that debt can be a very important tool for growth. It has a very bad reputation, but it's actually very important, especially in countries that need investment in infrastructure, healthcare, etc. Now, the misconception, and I think Vic started talking about this, is the problem in Africa is not how much debt they owe, but it's actually about the cost of repaying this debt or debt servicing. Because if you look at countries like the United States or Japan, for instance, debt to GDP ratio is much, much higher, but they still have very big credit ratings and investors have trust in them simply because they have strong institutions and no one is worried about how they're managing their debt. That's not the case for Africa. And what the African countries are also dealing with is some kind of unfair risk premium. And what I mean about that is higher interest rates, shorter repayment terms, compared to similar countries that are not African, and the fact that much of their debt is denominated in foreign currencies make it even worse. And where this unfairness came from, Ramya, if you think about it, the global architecture, financial architecture, did not have Africa in mind when it was set up. Back in 1940s, when the IMF was set up, only 2 African countries were sitting on the table. And I think that structure, the African countries are still kind of paying that price in terms of borrowing conditions until today. On COVID-19 and the pandemic, when it hit, well, debt globally surged, not only in Africa, because countries needed some fiscal space to support people and businesses. But the African continent suffered even more because the debt is denominated in dollars and in euro, because of also the interest rate that went up globally to try to tame inflation. And my final point is around debt restructuring and debt relief, which we hear the IMF talk a lot about it today. And why this is very difficult, because as Vic was saying, we're not dealing with one creditor or one type of lender. You have the multilateral, the private creditor, you have the bilaterals, and they all have different priorities. So it's very hard to get to an agreement with those, and I'll stop here.
I think it's really notable that these African countries are suffering through shorter-term loans and higher interest rates. It's just clearly an injustice there. And Hanan, I'd like to know from you what you feel are the primary factors contributing to Africa's high debt-to-GDP ratio, and to what extent does the structure of international lending that Dr. Rawaa mentioned contribute to unsustainable debt in African nations?
Yeah, so the continent has been really trying to keep its head over waters from wave after wave of tsunami crisis. So if you look at 2008, where the global financial crisis hit, and it hit globally, but yet as well, the recovery from Africa, it's much more challenging than other economies. And then we face the COVID-19 at 2020, and then we have the Russian-Ukrainian conflict at 2022, where the commodity prices has really surged, and there was a disruption as well in the supply chain. So all of these effects, they have ballooned the African debt to a staggering 69% of the GDP. And then if you look at as well the impairment of the loans, it has reached in 2022 around $150 billion, which means as well that you are risking over here the sovereign defaults, and it's not at a distance. So what are the 3 reasons, in my perspective, that's the problem of the African debt? First, all of the debt mostly of it is external debt. And that really exposes you to other governments, other financial institutions in terms of the high interest rates, the shorter terms. The second one is that these debt are denominated in foreign currency. So when you have the local currency being depreciated against foreign currency, that naturally inflates your debt, and it becomes very difficult in terms of debt repayment. The third one is that the combination of the creditors in Africa has changed over the past 15 years. So previously, you would see the Paris Club group. They are the usual creditors for African countries. And this because of the restricted appetite, because of the crises that we have mentioned as well, has created a new set of non-Paris Club group of creditors, which means that you're having private institutions, you're having the Chinese government and the Chinese institutions, and those are not as friendly bankers as Africa had before, which led to the higher interest rates, the shorter term loans, and hence the Africa repayments becomes a challenge.
And Taimoor, you believe the solution lies in private equity and increased FDI. And as you know, FDI into Africa fell by 3% to $53 billion in 2023, with Egypt and South Africa receiving the vast majority of that funding. How can we encourage more funding into Africa's 54 nations?
Thank you for the question. Look, it takes time. These things are very time consuming. It's much easier for a bank or a lender to give a loan than a PE guy to do equity. So there is a time component in all this. We've invested over $1 billion in equity in Africa, and we've been in consumer businesses, we've been in banks, we've been in telecom tower businesses, and it's been a successful business for us, but it's a tremendous amount of work because each investment is 5 to 8, 10 years, and you're going to go through your ups and downs. So I think it's a natural evolution, but certainly if you would look at the percent of equity to GDP in Africa, it's much smaller than any other place in the world. So I do think as these commercial banks are looking into these loans, if there is an ability to bring in an equity investor with them, it's good for the company, it's good for the bank. You'll get a lens into the equity as well, which is very interesting. Now, the biggest issue for equity investors in Africa right now is FX. We are all dollar-based investors, and there's been a huge devaluation in Nigeria and in Egypt the last 5-10 years, and not as bad in South Africa, but also a devaluation. So the 3 largest markets have had devaluations. So you could come in and say, okay, you've done 3-4x local currency. Oh, okay, great. Well, on a dollar basis, you lost money. And no international investor is going to go for that. Now, slowly you bring in the European banks, the EBRDs, the IFCs, the institutional social type of capital, because they care less about the returns. So you can bring them in slowly, but at some point you need to make dollar-based returns for your investors. And that's where I think better FX rates need to come through from the individual central banks as well.
Mm-hmm. And Hanan, how can the international financial institutions that Taimoor is alluding to and foreign governments better support African countries while promoting debt sustainability?
Well, I will shift the conversation a little bit from concessional financing to climate finance because I'm biased to climate finance, but I'll justify that as well. So basically, Africa, how we can look at it as a business opportunity rather than being a borrower, because this narrative has to change in the context of climate finance and climate crisis. So the climate crisis, as we're all aware, it is a global urgency, right? And Africa represents one of the green lungs of the world. So if we want to resolve the problem of the world in terms of climate, it's usually not in Europe. It's usually we have to do or enhance our biodiversity, invest in it, stop the deforestation, and usually Africa and the Amazon forest, they are one of the most populous areas to do that. And Africa has difficulty accesses concessional financing and in return climate finance as well. But this creates a huge opportunity for the green revolution investment. So if we want to export renewable energy, Africa is the place. If we want to monetize the forests and the carbon sinks of Africa, preserve the biodiversity, which in return is good for everyone on Earth, it's Africa as well. So in order to do that as well, we need to re-engineer the financial instruments that we have. It's not enough now for financial institutions to bring the conventional financial instruments and just green label them. That really doesn't work, especially for Africa. If I have an issue issuing a conventional bond or sukuk in Africa, it's the same issue for a climate bond as well. So we need to come with a new set of instruments. And these new set of instruments, I wouldn't go through an exhaustive list, but I will just focus on 3 financial instruments. They are very limited in terms of their execution in Africa. And the reason is the private sector usually, or the private financial institutions, are the innovative ones that comes up with these ideas or comes up with these structures, and they have the guts to be executing that. So I'll start, for example, with debt for nature swap. Debt for nature swap has been executed in a number of countries, Egypt one of them, and Gabon. It's basically that you, as a lender, you reduce the country's debt in return of investment or routing these repayments into biodiversity, environmental, and renewables as well. And this has been a very successful type of structure as well. The second one is carbon markets. So Africa today is only using 2% of its carbon credit potential. So I had the pleasure as well at COP27 to lead the Africa Carbon Market Initiative, where it creates a pool of 300 million credits of carbon, creates an ample of jobs with co-benefits as well of projects, and it prevents deforestation to start with, and of course, other benefits for the community and as well globally. The third one is the blended finance vehicles, which is the PPPs, the public-private partnerships. It's how you de-risk, how you are a public institution, whether you are an MDB or DFI, you chip in with the billions in order to facilitate the trillions for the African countries to access that. So I think the question over here is not how we can afford to invest in Africa. It's we cannot afford not to invest in Africa.
Absolutely, and I'm sure you know that Africa received just $47 billion in climate finance in 2022, which is only 3.6% of global climate finance. So surely those numbers can be improved. It is very unfortunate that we have run out of time for this panel. I'm receiving a message from headquarters. We will have to wrap up. Please do catch up with our panelists over coffee or over a bite to eat outside. I know that they have so many more insights to share. Thank you so much for being here today. Thank you.